One big economic decision in Washington will impact your life, your loans, and your financial planning. You heard that right. Such is the global economy these days, interconnected. And how is that possible? We shall explain. The US Federal Reserve on Wednesday cut its benchmark interest rate by 25 basis points, the first such reduction since December of 2024. Now, Fed Chairman Jerome Powell has hinted that more easing is likely in October and December. But hang on, this decision, and if the status quo is sustained, will directly impact your life. How so? Number one, your interest rates. The first impact on India will be at the RBI headquarters, which will directly impact your loans. The Fed rate cut raises the probability of a rate cut by the RBI's Monetary Policy Committee in October. Now, Fed rate cuts and lower inflation due to GST cuts increases the odds of RBI rate cut in October this year, which will directly impact your loans interest too. Now, club that with the government's recent limiting of the goods and services tax slabs to 5% and 18% and move several categories of products to lower rates, well, you have a deadly combination. Now, RBI has even more space to cut rates after the Fed decision and in case Fed continues to trim its interest rate. Number two, imports might get slightly cheaper. We have all seen how imports have been getting expensive and India's import bill has been increasing since the tariff war, since the interest rates and everything geopolitical, be it wars, be it trade wars. Now, the Fed rate cut is expected to benefit the rupee on the back of higher expected foreign flows following the rate cut. But given that a trade deal is still in the works between India and US and the continuation of a steep 50% tariff on Indian exports, investors will remain cautious, thus limiting inflows. Now, the rupee has appreciated in the last three trading sessions and closed at 87.75 against the US dollar on Wednesday. Now, in case the status quo is maintained and since all the imports are in dollar, rupee appreciation helps us getting imported items like cooking oil, crude oil, gold, electronics and any other import items cheaper. Last but not the least, FPI is returning to the Indian stock market, which will eventually refresh the market. Now, there is a reason the Sensex has been green since today morning. Experts have said that Federal Reserve's rate cut was widely anticipated, but a projection of another 50 basis points easing this year could be far more important for India. How? If US yields trend lower, the spread between the 10-year government bonds, Indian government bonds, and the US 10-year treasury, which is already around 240 basis points, will further widen. And this would support incremental FPI inflows into government bonds. This means FPIs who have been leaving India over the last few months can be coming back to the Indian market in search of higher yields. Of course, they don't love India, they love returns. Therefore, you see, one big economic decision in Washington will directly impact your life, whether you are sitting in Chennai, Kanpur, Banaras, does not matter. It will directly impact your life. Stay tuned for more such updates and stay tuned to Live Mint.